Good evening. This is Brussels Radio, number one business radio broadcasting from the city of Lagos. This is our flagship program, which you have enjoyed over the years. It's you that made us to go back and try to educate you more on this very important issue. Some of you have asked, what is in it for me when I invest in shares? What gains do I make? And of course, I don't blame you, because nobody goes into a thing that he will lose. So we have taken our time to bring out the benefits of investing in capital market instruments, beginning with shares. And of course, I want you to know that shares are not the only instruments that there are in the capital market, but they happen to be very popular. Therefore, we start with shares. Shares are called shares. They are also called ordinaries. They are also called equities, depending on which part of the world you are in. Some people call it shares, some call it equities, some call it ordinaries. They mean the same. In a very simple term, shares are evidence that you own a company or you own part of a company. So when you have 10% holding in a company, you can stick your neck and say that I own part of this company because you have shares in that company. So shares are what they say they are. They have no other better meaning than evidence of ownership, having interest in a place. Having said that, the question comes, what do I gain if I invest in shares? I will be as simple as possible, because I know that some of you are beginners. Some of you are also first-timers. Some of you know next to nothing about the benefits. So my use of language will be simple. Number one benefit of investing in shares is what we call dividend. Another word for dividend is cash reward for investment. That's a definition. Cash reward for investment. How do we arrive there? A company does a business. At the end of an accounting period, they call an AGM. AGM for short is annual general meeting. And in that annual general meeting, they render account of their stewardship. I mean the managers of the business. And part of the things you hear is that during the period under review, we made a profit of 1 billion naira. We are going to use 600 million to pay dividend to shareholders at so and so rate. Now, in a simple term, dividends are appropriated from profit of the year, and they pay out according to the number of shares you have. So shares will pay you dividend if you buy shares. You will get dividend from the company, and dividend is cash reward for investment. Having said that, the second benefit of investing in shares is called bonus. Another word for bonus is non-cash dividend. You get more shares, more number of shares for investing in the company, and that's called bonus. This time is not cash, but of course you know that it is capitalized reserve. It also came from the cash of the years before, and they will now capitalize those reserves after some time. The language of bonus is 1 for 4, 1 for 2, 4 for 1, like we just had the other time. Now, that is the language. What does it mean, 1 for 4? 1 for 4 is for every 4 you had, you get 1. When you hear 4 for 1, it means for every 1 you have, you get 1. You get 4. That is the language of bonus. The language of shares are different. You hear something like 10 naira per unit. The language of dividend is that 10 naira per unit. So they pay you per unit, but in this case, they give you shares for having held the shares to the point they are paying, and of course, they capitalize their reserve. That's number 2 benefit of investing in shares. The third benefit of investing in shares is what we call capital gains. Capital gains. In a very simple language, capital gains is appreciation in the value or the market value of the shares for the period, between the period you bought it. Let me take it very simple. You bought 10,000, you bought 1 unit of Fidelity Bank shares at 5 naira. And today Fidelity Bank is 11 naira. It means you have gained 6 naira on top of the 5 naira you bought it. So 6 naira is your capital gain for investing in Fidelity. That's an example. Now, this is a benefit. It simply means that if you put in 1 naira, it is no longer 1 naira that you put in when you bought it. It has increased. So the third important benefit of investing in shares is capital gain. And of course, there's another benefit of investing in shares. If you want to go to the board of a company, invest in shares. That's one sure way of going to the board. And if you have certain percentage interest, if you have certain number of shares, you can lay claim to a board position. And of course, that's not the only way to go to the board. You can also do syndication. You can also do networking. Get as many shareholders, collect their proxy cards, put them together. They will vote for you. That's simply what it means. So if the number is good to face the rest of the board members in the AGM to take up a position in the board, you get it. So that's one sure way of going to a company or going to the board of a company, by acquiring some interest in the company. Now, another benefit of investing in shares is that shares factor in inflation. Oh, that's one benefit that people don't know. What do I mean? Prices are increasing across board. Inflation is eating deep into our investments. But one investment that over time factors in the effect of inflation is shares. I have been telling people that the prices we have amongst the companies that are quoted on the Nigerian Stock Exchange now have not fully factored in the effect of inflation. So what do? Buy shares now. Very soon prices will adjust because it will factor in inflation into the share value. So the benefit of investing in shares is that you will not lose value on your shares over a long run. By the way, for your information, shares are not short-term instruments. Shares are long-term instruments. So if you want to play short, that's not a comfortable place to go, buying shares. So over a time, it factors in inflation. Now, another beautiful benefit of investing in shares, which I will take some time to explain, is the ease of divisibility. Shares are easy to divide. Maybe I'll give you an illustration that will help you to understand what I mean. I own 10,000 shares of First Bank, and I have 2 children, and I just leave it for them. They will get it 5-5 or the number as I want. Maybe I will say, give son A 6,000, give son B 4,000, or give this person this. So the moment you make that pronouncement, your stockbroker will split it and give out. That's an investment that is very divisible. But let me give you an instance. Let's assume that you have 6 children and you only own a house in Lagos. The 6 children have one option. Option 1, sell off the house and share the money. Option 2, begin to divide it. I don't know the kind of house it is. Maybe it is first me, I face you kind of house. If they have 6 rooms, you may have to share it 1-1-1. But I know of a case where after sharing it, one heady son will come and collect rent from the other tenants and pocket it. Meanwhile, they is not supposed to. That is one bad one. But let me give you one that happened to me. I used to have a client who was a Muslim. He had children from 5 women, including 4 of his wife and an external person. And on the whole, he had 14 children. He used to have a house in Lagos Island where those children grew up. And the older wives, their children have grown up at the time the man died. I remember that they came to my office, 4 of them representing the rest of them. And we tried to share out the shares that the father had. We didn't have problem. They came with a letter instructing me to split the shares into so and so and so and so. I did. But the problem came when they had to share the house. The older children said, this is a legacy house. We want to call it a family house. We don't want anybody to sell it. Because they were more comfortable. The children of the younger ones were not as comfortable. They wanted it sold so that they can get some money. But the big boys were there. The big boys refused the sale. What option do they have? They decided to now share the rooms such that you now have to collect from a tenant. And you can imagine, and they started from the top. The children of the first wife took the choice areas. It got to the point that the children of the fifth wife, who were also small, who needed the money more, didn't get anything, but they needed to get something. You know what they got? The thoroughfare, the passage. Thank God for Lagos passages. They are big and wide. So one of them got a portion in the passage, not the entire passage. But thank God that Lagos Island, everything is money. There were people who were doing photocopying, small stationaries, and they needed that space. So he gave them out. They became their tenants. That very small portion. So he collects money from them as tenants. That was his own portion from his father's property. Now that tells you the indivisibility of house. And that was where the problem is. But shares will not be like that. So divisibility is one of the beautiful benefits of investing in shares. And of course, the last one I would like to treat now. By the way, this is part 1. When you get part 2 and you needed to see part 1, please check for it. It will be loaded down there for you, both in Facebook and in YouTube. You can also see it. The last in this group, in this part, is what I call noiseless store of value. Noiseless store of value. Shares are store of value. Money as cash is store of value. House or property is store of value. Gold is store of value. Today, crypto has become store of value. Silver is store of value. But this one is said to be noiseless. That's the distinguishing characteristic of shares. They are noiseless. Noiseless because if I don't tell you my worth in shares, you will never know. If I open my mouth to tell you my worth, then you will know. So it is noiseless because nobody knows you have it. It's not like I have a house. Let's assume that I own this property where we are. Everybody looks at it and says, Mr. Anya owns this property. And kidnappers will come after you. Cheats will come after you. People will come to bother you because they have seen a skyscraper and they say it is your own. And your life will be made uncomfortable for a reason that you didn't commit. So, but if it is shares, not until I open my mouth to tell you what I own, you don't know. And nobody comes after my life. Nobody comes to kidnap me. Nobody tries to ask me for what I don't have. So it's a beautiful way of investing. For those of us that don't want to make noise, those of us that are not noisy about investment. So it's a noiseless store of value. I'll tell a story in closing. I used to have a client who used to come from Onitsha. This man was stickingly rich in shares. He didn't tell anybody, but I happened, because I was a stockbroker, I know his value. Oh, he had shares, and I mean he had shares. When he died some years ago, I went for the funeral in Onitsha, and I sought for opportunity to meet the wife. The wife never met me before. And when I met the wife, I introduced myself as the stockbroker to the late husband and tell her that whenever she wants to talk to me, this is my card, and I handed over. After the period of mourning, the woman called me and wanted to see me. And she came to Lagos. I still remember sitting right in front of us, or her sitting right in front of me, and we were discussing. I began to tell her, this is the CSCS statement of your wife, of your husband. Some of them are yet not dematerialized. And this. When I finished, very patient Igbo woman, she said to me, how much does this thing worth? I said, that's the question I expect from you. I said, it's worth 273 million naira. I saw her almost fall out from the chair. Never knew the husband had that kind of money. Never had that kind of money before. The man hid it from her, didn't let her know that she had such kind of money. And he didn't let her know. So why? Because it's noiseless. If you're a house, you can't hide the house. If it's any other property, you may not be able to hide it. But shares have this special attribute that it is said to be noiseless. And if you do not want armed robbers to come after you, if you do not want hijackers, if you do not want kidnappers, or people to come and bother you for money that is not there, shares I recommend for you. See you in part 2. Thank you.